company. So we follow 4 jobs through the 3rd quarter to see how costs are accumulated, how finished goods are valued, and how remaining work in process is calculated. Are you following now? The work in process somehow is always there. It's not never disappearing, right? But what is important, again, they provided you with the opening balance. So I want every one of you here who's looking at a paper like this, already your brain should come already on. Your critical thinking, because you are looking, oh, opening balance on the 1st of July. Okay. What does that mean? Why are they providing me opening balance?
Your starting point.
That's your starting point. That means what? Those particular jobs, they came from last
Previous.
quarter already.
Yeah.
Previous quarter. Absolutely. Thank you so much, Denver. So you on already. Don't be surprised. Don't act surprised. You know what's happening. You know what's happening here, right? So I have opening balance, but then I'm having now, oh, the 3rd quarter itself, right? Because they're providing me these 4 jobs. And you can see the job numbers are there. It's pretty much well detailed, right? But they give me the 3 musketeers. No, not quite. They give me the machine hours. And that should be already automatically an indication to me to say, wow, this is the cost driver. Isn't it? Why would they be just providing me machine hours? What is it doing there by itself? But in any case, maybe I might be wrong. Maybe any of the 3 could be a cost driver. Who knows? But yeah, so we're moving on. But check here. The first thing, what was the first step that we talked about? We said that we need to look at what is the application rate, the overhead application rate. So factory overhead are applied based on machine hours. Oh, so that's the reason why they were providing the machine hours, right? Okay, so makes sense. So, but they will provide me with a total. What is what you guys have budgeted? In fact, you can start asking the paper already automatically. So what is it? How much did they budget actually? So 800,000. They said it there. 800,000. Right, okay. And then what? So what was the budgeted machine hours? Because remember, those things that they budgeted it from last term already. They're not going to wait this term in order for them to budget. In fact, that's how we look at over application or under application. Because afterward, when we do actually the term itself, when we run through the actual term, we will have the actual numbers. Then we can compare now the actual numbers with what was budgeted. Does that make sense? So when you hear the term over application and under application, it has to do with the budgeting. But simple as that. So since it is the machine hours, so the cost driver rate would be an X amount of rent per machine hour. And how do we find that? We just divide the total budgeted overhead divided by the number of the total machine hours, which is 50,000, right? So 800K divided by 50K gives us 16 per machine hour. Denver, you can check this one. Those should be accurate. If it's not accurate, we need because this is an actual example, right? All right, so guys, now what do you begin doing? You don't need to say, oh, let me go back to the steps and memorize them. No, obviously, if you have the overhead rate, the next thing you do is just applying that overhead rate. That's all. So based on the machine hours they gave us for the different jobs, so we can now multiply each one of these by 16. As simple as that. And that's what will give us the applied overhead. And guess what? As simple as that. You have the third musketeer. All right? So now, let's move on now to the working process or the finished good. Very interesting. So the entire question is in your textbook, but this is a good summary of it. And I want you to see what is very important here. But perhaps, simply perhaps, I should go through your learning unit 7, the most advanced stage, as you know it, and maybe look at this example in particular. Let's see. You know, you have everything here. You have every arrow waiting for you. I think this was the question. That was the question. Perhaps just because I might get one of you saying, it's not like the actual paper, right? So remember again, on the actual paper, I just wanted to show you, on an actual paper, you will see, okay, working process balance, 1st of July, they provided you this. When you see balance on the 1st of July, you know that this is the opening balance. This came from last term and was not completed. So work in process, meaning that they didn't complete the jobs. These 2 jobs were not completed. But these are the costs that were incurred in this term. And then what else? The factory overhead. This is the part where we started calculating the absorption rate, remember? So there's nothing new here. Maybe what I wanted to show you is this. You see this line here? Just open your eyes. Open wide your eyes here. You see they tell you that job 641, 50 units were completed. 642, 100 units were completed. 643,000 units were completed. So that's what I wanted to show you, because that's important. That's very important. So let's go back here. So they told us these 3 first jobs were completed. So we need to take that into account, isn't it? This last job was not completed. Guess what had opening balances? The first 2, they had opening balances. Do you remember? Opening balances. So we take the opening balances plus the direct material, plus the direct labor, plus the applied overhead, and we get our total cost. As simple as that. 1 plus 2 plus 3. That's what I mean, guys. As simple as that. But if they ask us the question, one of the questions is what, you know? If they ask us the question, now if you go to the actual question here, they say total cost of all jobs. You must calculate the total cost of all jobs, which we have done. You must also calculate the cost of finished goods. Always read carefully the question, finished goods. And you must also give us the value of the work in process at the end of September. All right? Does it make sense? So for the finished good, we know that only 3 jobs were completed. Not everything. Only 3 were completed. Aha. I hope it's opening your critical mind. Do you see the difference between completed and incomplete? If it's not completed, it's not going to be part of the cost of finished goods. You see, the cost of finished good will include only the 3 first jobs. Does that make sense? And if they're asking you what is still in work in process, of course, what is still in work in process is this one here that is incomplete. So it's still stuck at the production phase. It has not yet moved to the completion phase. Because after the completion phase, you know the progression. What comes next after the completion phase? Advanced learners, what comes next after the completion phase? after the finish good.
Sales.
We are dealing sales. Sales, yes, Denver. Right. Okay. All right. So this is just, you will see that in your textbook. They just give you this to say, oh, reminder, by the way, there is normal spoilage and abnormal spoilage, which, by the way, you read. It is part of the previous chapters that you read, right? So you know what this is about. You know that normal spoilage is something we anticipated. We know that, yeah, we do sometimes get one or two things wrong here and there. And so we would take that spoilage cost into account, right? But there is abnormal spoilage that is not anticipated. This is in excess of the normal spoilage. So you need to pay careful attention to this, right? Normal spoilage and abnormal spoilage, right? Let me just check again my time. All right. And that's a good example now. Now we're moving from production to profit. Now pay attention. Please open your eyes, but relax your muscles. You know, no needs to be worried here. It's all about the reading. So we referring back to the completed jobs. Remember those jobs that were completed? They were the first three, right? We need now to calculate the gross profit. We're not going to calculate the gross profit on something that was not completed. We didn't even pass the test. So in your brain, you should not take that into account when you are looking at actual profits, because you will look at what was completed. And that's where basically they provide you with the way, for example, at looking at sales calculations. You remember that sales, they could give you an actual amount to say we're going to sell the product at 35 rand per unit. They can give it to you. Or they can say the way we calculate the sales is we need to do a markup on the cost. So like you can see here, for job one, they're saying they do a markup of 50% markup on the cost. So you basically just take the total cost and you multiply it by what? Please, in the chat, can you write to me, you multiply by what? Shortcut. Hearing from you guys.
By 1.5.
1.5. Thank you so much. The same is here. For job 3, there is a markup of 30%, right? You know what we do. What do? We multiply by what?
0.3%.
1.5. Did I hear you correctly, Denver? 1.5 or 0.3%?
3.3.
No, so 0.3 to find the actual markup. But if we want to find the actual sales revenue, to be just quick, what do we do?
1.3.
Then 1.3, Denver. We got a part.
Sorry.
Then we just multiply by 1. So that's how they got this. Now, what was important is that in your textbook, you will understand why. Remember that what was completed for job 1 was 50 units. Okay, maybe you will be like, oh, I'm lost here. I'm lost a little bit. Okay, let me remind you. Remember this line that I showed you. I said that the first job is 50 unit that was completed. The second job is 100 unit that was completed. And then the last one was 1,000 unit that was completed. Do you remember that part? That's what I'm talking about. So what I'm saying here is that you would see that when it comes to this one, but specifically job number 2, it was 100 units that was completed, but it's only 95 that was sold. Remember what I was telling you last week. Pay very careful attention between what is manufactured, what is produced, and what is sold. And that's why we look for the cost of goods sold. Do you remember that one last week? Does that ring a bell? All right, so thank you so much, Sarah. So we're on the same page, right? And again, like I said, it's a quick summary because remember to fold all this within an hour. It's not easy, but if you go here to this question here for 7.5, sales of finished goods, check here for the second job. 95 units were sold at 35 Rand per unit. That's the summary that I'm talking about here. To say, you will not just go and say, oh, how many were completed? 100. I will just take 100 multiplied by 35. You will get it wrong. Do you see how you can lose marks? Which, by the way, shows that you are not fully grasping or you are not paying attention in class. Because I can see when a student just put, okay, it's 100 unit that was completed, multiply by 35. It gives me 3,500. And they're very happy. I got it right. My thing is that if you get this wrong, you're going to get the gross profit wrong. You see where we're going? Are you seeing where we're going? You're losing more marks. So pay careful attention. So, and that's the reason why when we're going to do the cost of sales, do you see the total cost? Do you see the total cost? Do you see the total cost? Do you see that this cost is exactly this cost here? So you take then the sales revenue minus cost of sales. But do you see that this one is different from this one? Why is that?
But it's 95 units and not 100 units.
Absolutely, Denver. 100%. Denver, if it was up to me, you have already passed the exam. So guys, again, pay close attention. Pay close attention. Don't make silly mistakes because you are simply rushing. You're not understanding things. So pay close attention because, by the way, just sorry, something is stuck in here, but if you take 750 divided by 100, you have, sorry, I multiplied. My bad, guys. That's the reason why you double do your calculations, right? Divided by 100 gives me this, multiply by 95. So I know now what was the cost per unit, but now for 95 units, isn't that a cost? Isn't that a cost? Are we on the same page? Tammy, Kaylee, Ciara, are we on the same page? All right. All right, so, and you know the rest, calculate the gross profit. Obviously, when you get the gross profit, you can even provide the total gross profit for the entire quarter. You would just add all these. You see the tallying of this. It's a pleasure when you're tallying, but you're very careful. But now there is something to do with learning unit 7 that also talks about the ledger. Remember, I told you the ledger is the best way, the easiest way to keep track of some of these costs because the ledger is always that balancing act, right? And this is the most beautiful picture I've found because this summarizes everything so well. Because it says you need to look at the material control accounts for the ledger. You need to look at the labor control account, because ultimately what we're doing here, this exercise, is helping you to understand that when you talk about finance, you need to be able to control your cost. If you're able to control your cost, then you're able actually to maximize your profits. So cost control is very, very vital, right? So labor control account, and then we have a factory overhead control account. But what is important with this factory, this one, is that it also assists you to look at what is actual versus what was budgeted, what was applied. And that's what will give you an indication of if you have an under or an over application, right? I mentioned that a few slides above, right? Or before, right? So, but again, like for all the progressions I've given you in class, even last week, the progression I gave you in class, it's always about coming to the working process, which is the actual production, where the actual production takes place. And after the actual production, we have the completion, finished goods, just like we said. And Denver answered that correctly to say the last stage, obviously, that we would be looking at will be the cost of sales. So that's it for the ledgers. Right? The ledgers will be as simple as we've always done in this classroom. It's always about your right-hand side and your left-hand side, and you do the balancing, right? Remember, you have an opening balance. So let's say there is a good example in your textbook. Please have a look at it. It talks about these different projects. I suppose they are construction projects, because there's the South Coast, there's the North Coast. Is it North Coast? Okay, maybe you will tell me, I don't know what you're talking about. I'm just making it fun, right? So what I'm talking about, this is an example of a job order sheet in your textbook, right? So we've covered it. Spoilage, we covered it. You see how your textbook just flows quickly, These are easy, they're not difficult. And we are here toward the end. We are talking about ledger account for a job costing system. They are the same thing that we applied last week, but now we are applying for job costing. That's all we're doing here. But what I wanted to tell you is this example here. It has 4 projects, as you can see. What is interesting is that at the beginning, when they give you, if I can see the balance, they only provide you the balance of 3 projects. I remember the balance is at the 1st of March. But what happened in March itself? So we understand that the balance came from the previous month of February, but was not completed. But it needs to be completed in March, before the end of March, isn't it? But this municipal project is a new one, isn't it? So meaning that it is a project that is starting in March. Do you think it has any chance of completion in March? So obviously, by the small trend that we are seeing here, maybe this job is not going to be complete in March, because we see projects from previous month being finalized in the current month, right? And when you read the questionnaire, you will see that the South Coast project was completed. This one was completed, okay? The Midland project was completed. Thank you very much. The municipal project was what? Is incomplete. Do you see that? Guys, can you tell me that you're opening your eyes right now and you can see what is happening? So what I'm doing here is to show you, when you're looking at your paper and you're reading your paper, first of all, do not panic. There's no need for you to panic. It doesn't solve anything. It's just you are skilled enough, you are prepared enough to understand. So what we want is just for you, when you read, you are reading with an understanding to be able to say, well, wait a minute, this was not completed. And this one, the North Coast project, was completed, but it has not been sold as yet. Isn't that interesting? Oh, finance is beautiful, people. All right. And they're asking you for the work in process accounts. You also need to provide a manufacturing overhead account. You need to provide a finished good control and a cost of goods sold account. And these are the ledgers. This is how they will look like. So, and that's the reason why I would like to just look, for example, at the absorption rate quickly just here, because the absorption rate here is given to you here. The manufacturing overhead are absorbed at a rate of what? Of 15 Rand per direct labor hour. 15 Rand per direct labor hour. No worries, Tabby. All right, so guys, are you seeing this? With your own eyes, you are looking and you are seeing this. What does that tell you? And guess what? Here are the labor hours provided to you. Then it becomes a simple thing of just multiplying this by this. And even if you say, Patrick, this, it's a bit difficult. I'm not seeing properly. You have all the arrows here I've provided to you. So you have no reasons to say that you didn't do well. All right. So again, guys, everything, when you're practicing, everything is provided to you, right? So that in case when you are practicing, if something is missing, you're not understanding, you just need to go here and have a look, right? Okay, so guys, just to finalize, because it's already 7, we are about 2 slides to finish. But as you can see, this one here, remember the absorption rate was 15 Rand, 15 Rand per hour. So for the South Coast, we have 60 hours, labor hours. So 60 multiplied by 15 gives us 900. You've been provided with the material, you've been provided with the wages. You now have calculated the manufacturing overhead. Easy for you to find the total. And why is this side called finished goods? Because we know that this project was completed. That's why we write finished goods. Does that make sense? If not, we would not write finished good. But let's look, for example, at the manufacturing overhead ledger. Because the actual payment that they made, which I want to show you to finish with, the actual payment that was made for manufacturing, not the budgeted, the manufacturing overhead for March were 4,500 paid by EFT. So that's a direct payment that was made in March. This is nothing about the absorption, the budget. No, it's an actual payment. So the implication of that is that obviously when we are tallying everything, so this came from, obviously we are manufacturing overhead. These are all the things that we calculated, right? The 900, the 550, all of these were calculated by multiplying the labor hours, direct labor hours multiplied by 15 Rand per hour. You remember that? So that's how we found all these. So we calculated them. But we have a direct payment for overhead that was made. And when we look at these 4,000 and the total of these budgeted, the budgeted is less than the actual payment. Are you all able to see this? So if it is less, clearly it is an under application. And if this is not part of the work in process, if it is not part of the work in process, it means that we are talking about goods that have already been somehow sold. And I will explain that to you when we go here. And I will say to you this. So when you're looking at this example, come here and see what this is added onto you here. Do you see that? Remember, we are putting the ledgers of the three musketeers: direct material, direct labor, and manufacturing overhead. So for this ledger, when we have put everything that this was what we budgeted, this is the actual payment, and we can see that there is a 1,800 missing. This 1,800, if it is not work in process, to make it easy for you, if it is not part of the work in process by the end of the month, it means that it's something that has already been sold. Because we can't account for that in the work in process. All right? And that's why when you look at the actual ledger for the cost of goods sold, you will add this year. I know it might be a little bit just slightly confusing here, but you remember we were talking about two projects that were completed. You remember? South Coast and Midland project. And you will see that all their work in process are here. But the one that we have to remove and eliminate is the North Coast because it was unsold. So we add up all the finished goods on the side. We add them up for South Coast, North Coast, Midland, because they were completed. But because this North Coast was never sold, we have to remove it from our balance because it was never sold. So it cannot form part of the cost of good sold. Does that make sense, guys? If that makes sense, we are done for the night. And I will show it. I will show this to you again. Remember this. I was reading this line to you, saying that the North Coast project was completed. Yes, it was completed. So you need to keep track of what is completed and what is not completed. We know the municipal project was not even completed. We don't even take that into account when we do this ledger for the finished goods. You see here, we don't even have the municipal because it was not completed. But these three were completed. But the only problem on this side for the finished goods, for the cost of finished goods, is that this one, the North Coast, was completed, but it was never sold. Does that make sense? So let me hear from you, Denver, Taylor, Sierra. Does that make sense? So, and that's the good thing of coming to class because you can see this. But I put a note. I put a note in your OneNote so that you can see this. So we have to eliminate the North Coast, this side, because it was unsold. So when we look at the cost of goods sold, it's only this amount of 63,000 we are going to move to the cost of goods sold. Yeah. So, any question? I'll need to, right. So the recording at least is stopped. Because I have highlighted the main